Record highs of gold prices and increasing prices for Bitcoin might herald an increase in inflation over time. Indeed, market participants also have increased their inflation expectations, but it's still on a reasonably low level. There are some implications of the corona pandemic on inflation. In the short run, we think it's mainly on the downside because of the sharp fall in demand. In that respect, on the medium and short term, we think inflationary risks are not existent. That changes over the longer time. There, in our view, there are 5 driving and remaining factors from the corona pandemic. There's the change in the structure of demand of consumers and households caused by the experience on the health and job security side. Also, companies start to look at their production and value chains in respect of the resilience against future pandemics or external shocks. We have also an increased activity on the trend of digitization. And we see that sustainability has an even higher impact in economic activity as it used to have before, particularly in the area of climate change. And at the end of the 5 factors, we see that there is a higher impact of government activity on the private sector, both in terms of direct interventions from the government in the productivity area, and on top of this, by the massive intervention of central banks. Over time, those 5 factors probably will reduce the productivity of the whole economy somewhat. The impact on inflation, in our view, is less clear. In that respect, we have to have a closer look on the development on the monetary side. This massive increase in central bank liquidity, by definition, is a risk for inflation. But a huge part of this liquidity is staying within the banking sector, so it's not going into the broader monetary environment. And in that respect, it's not inflationary. Looking at the broader monetary developments, we see there as well that a big chunk of the increase of the monetary base is not really inflationary, because the monetary volume is going up, but the velocity is coming down for a longer period of time because households and companies are also hoarding liquidity. And we see this in the increasing market capitalization of equity and fixed income markets. So in that respect, there is also little risk that from the quantity there is a big move to higher inflation in the medium term. Another factor to look at is the quality of the central bank's balance sheet. And in that respect, as long as the quality is backed by high quality bonds, we see little risk that there is an inflationary boost coming. But at the time when the quality of the assets underlying is diminishing, this boost might come. So, in conclusion, there is a risk that, caused by the increase in liquidity from central banks, the corona pandemic might lead to higher inflation. But this is only a risk on the longer term, and it's not a given for the short and medium term.
Anything else?
As the summer comes back, I would take a cool lemonade.